Hi everybody, this is Ospreyeye from MyChartCoach.com, and in this video we're going to take a look at some of the marine transportation stocks and some of the other stocks that closed in play on Friday. Okay, first up is DCIX. Okay, the chart has been trying to heat up, still at oversold levels on RSI and FASTO. Extreme oversold levels on both indicators. Uh, what's going on here is there was a close on Thursday finally above EMA 4, currently at 0.43. That is the key level to hold. That's the pink line here. Notice it was the first close above that level since back here on the 24th of July. And so what we're looking for now, we want to see that level turn into support. The next key level to break is EMA 8 at 54. So in order to head higher next week, it has to get above EMA 4 and turn that level into support. If you look here, if it does close above that level, we're looking at a potential run up to Dollarland up here to test EMA 13, currently at 99. There was big volume on Friday, but the black candle signals that even though the share price was up on the day, it closed below the open. So yeah, keep an eye on DCIX. We're going to see if it can continue following through next week. If you look here at the 15-minute chart, this is a 3-day 15-minute chart, you'll see the key resistance level to break is this blue line here. That is the 300-day or the 300 simple moving average at 47. So right now the candles are in between the flex point here. They're between the middle Bollinger Band at 46, which is the key support level to hold, and the 300 simple moving average at 47. So on Monday, if it breaks above 47, that's going to signal that it's in play. You're going to want to see it hold that level. As long as the 300 simple moving average holds, it will signal more upside potential. If it breaks down below, then you could see a drop down to the 50 simple moving average. It's at 44, and then the big level to holds down here at the 100 and 200 at 40. If it drops below that then it's going to be a major red flag signaling more downside risk. But a break above 47 should signal more upside potential. Let's take a look at DRYS. Okay, this chart really heated up last week. Really big close on Friday. Closed up 51%. RSI is still below 30, so at 27 it's still at oversold levels. FASTO now is up here in the bull zone at 65, so it's still below the 80 overbought level. What bulls want to see is they want to see that middle Bollinger Band turn, or the 50 level turn into support, the middle there. If it can stay above the 50 and stay in the bull zone, that's going to be a signal that the chart is strong. If it drops below 50 on FASTO, that'll signal that the chart is cooling down. Okay, so a black candle did form on Friday. And so, like I said on the previous chart, there was this signal that even though DRYS was up on the day, it closed below the open. There was a giant gap up open. This is the open, the top of the candle up here, and then the close was well below. And that signal that the bears were pretty strong into the close. There was a little rally off of low of day. Notice there's a gap between low of day on the candle on Friday and high of day on the candle on Thursday. That gap could fill next week. So if the share price pulls back, what you want to see is that middle Bollinger Band currently at 215. That's going to be the big support level to hold. If the share price drops back down to 215, that would fill the gap, and that could make a very nice bounce play as long as support holds. If DRYS gets back below the middle Bollinger Band, which is this dotted purple line, then it will be a risk to hold, and it will no longer be in play. It is still in play, even though it formed this black candle, because it is above the middle Bollinger Band, and we're looking for a possible new uptrend to begin. If you notice, the gap up open was right at the bottom of a gap. Notice there's a gap here between low of day on the candle on the 18th and high of day on the candle on the 19th. The bottom of the gap level is the key resistance level to break. Okay, then you've got the upper Bollinger Band at 487, and then you've got the top of the gap. So if it can get above the bottom of the gap level, we'll be looking for potential gap fill. So there's two gaps in the chart. There's an upper gap that needs to fill, and there's a lower gap that needs to fill. The DRYS will not be able to keep running higher without coming back and filling that gap at some point in time. DRYS always fills the gaps on the downside, so just keep that in mind. Let's take a look at TOPS. Okay, so this is another marine transportation stock that's been it's been trying to get let me show you daily chart first. It's been trying to get a close above EMA 4. So if you look down here, this is similar to the other marine transportation charts. You notice the pink line here. It's currently at 163. Well, tops needs to close above that level in order to make a run up to EMA 8, which would be the next target. It's trying to heat up down here. It did form a black candle as well. All the marine transportation stocks got attacked by the bears after the gap up open on Friday. So going forward next week, what we're looking for is we're trying to see the bounce continue. So even though they closed up on the day, it was still being attacked. Notice there was big volume. There is a gap on the chart. So if it does start moving to the upside, the key levels to break are going to be right here under $4. That's the bottom of the gap, and then the top of the gap is up here just below $7. Notice the middle Bollinger Band's at 632. So keep an eye on tops. It will be in play if it can close above EMA 4 next week, but if it fails to close above that level, it will not be in play. So and keep in mind, these are very, very risky stocks to trade. They have nasty downtrends, and they're very good at doing one thing, and that's selling shares. So if you are looking to trade tops, I'd watch this 15-minute chart. As you can see here, the candles are closed above the middle Bollinger Band at 133, above the 50 simple moving average at 137, and then right at the 100 simple moving average at 141. That's the gold line there. So that's the key level to break. If you can get above that 100 simple moving average, that is going to be a very bullish signal, and that will signal more upside potential. You could see a potential run up to this 170. Notice that the 200 simple moving average on this chart is all the way up at 226. So this is the big level. If it can get above 141, you could see tops head higher. Okay, take a look at XCO. Okay, this stock had a nice bounce on Friday. This is the very similar. Okay, this is in the energy sector, but it's definitely trying to reverse as well. This is a very similar chart to those marine transportation stocks. The marine transportation sector has been beaten up, just like the energy sector. So a lot of these stocks are riding EMA 4 resistance lower. As you can see here, the RSI and Fasto are both at oversold levels. There was a bullish crossover on Fasto on Friday, and so this is the same thing we want to see on this chart, is a close above this pink line. That's EMA 4, currently at 127. Notice how the candles have been riding below that level since the close back here in July, above that level, and then it hit the middle Bollinger Band currently at 185 and failed to break that level. So going forward next week, just keep an eye on it, and if it closes above EMA 4, that should be the signal that the bounce play is in progress. Right now we're looking for bullish reversal confirmation. It did form bullish one white soldier reversal pattern. So a white candle on Monday and a close above the closing price on Friday would be bullish reversal confirmation. What you want to see is you want to see bullish crossovers down here on MACD on both time frames. What that means is you want to see the black line cross the blue line to the upside for both of these indicators, and for both time frames. For the top one here is 12, 26, and 9, and this is the 8, 13, and 5. And so when the black line crosses that blue purple line to the upside, then that is usually a signal that the stock is trying to reverse, and so that's what we're looking for here. And so keep an eye on XCO next week. Another stock to take a look at is AEZS. Okay, this stock had a nice bounce off the middle Bollinger Band or not a bounce off, bounced off the 100-day simple moving average. If you look here, that's currently at 172. But the bullish development was the close above the middle Bollinger Band, currently at 198. Okay, so that is the key level to hold. It needs to stay above that level next week to remain in play. There is a small gap between the high of day on Thursday and low of day on Friday. If it drops below the middle Bollinger Band, you could see that gap fill. It drop down to 180. If the share price hits 180, that would fill the gap. And then to the upside, the big level to break is going to be this 200-day simple moving average at 249. That is the target to the upside. You know, there is going to be some resistance here around 220, 219, where the closing price there. But really, the big level is going to be this 200-day simple moving average. So going forward, if it can stay above the middle Bollinger Band, AEZS will be in play. It's got to stay above this 100-day simple moving average. That would signal big downside risk. If that broke, you could see a drop down to the 50-day simple moving average all the way down here at 140. Okay, let's take a look at CDNA. This is a thinly traded stock. Only had 228,000 shares traded on Friday, but it did close up 15%. Let me go back real quick to AEZS. I just wanted to show you that the good thing about this is you have RSI here in at 58, so it's well below 70, so it's got a lot of run, and it's in the bull zone until the overbought levels. And then you notice on a previous run it did run all the way up to 90, so that is good. Bulls want to see that RSI stay above 50, and then Fasto broke above 50 and closed at 52, so it is signaling the chart is heating up. The red flag was the long upper wick on Friday's candle that showed people were taking profits on the move up to 230, and the bears were attacking a bit. So we want to see that middle Bollinger Band hold and the push to the upside to test that 200-day simple moving average. Okay, let's look at CDNA. Like I said, it's thinly traded, only 228,000 shares traded. It is in the bull zone on RSI at 62, and in the bull zone on Fasto at 60. So it's got some room to run. The key development on this chart was the break above the high close resistance. So it closed above the closing price here in August, which was the high close. And then now it's lined up to test this recent high close on July 10th, that at 160. So if you see the share price break 160 next week, that's going to be a signal that CDNA is ready to head higher. If it fails to break 160, you could see it work back into the bands. It does have this nice uptrend going, and if you look here, there were a couple of recent volume spikes. So it looks like some people loaded, and then there's just not a lot of interest in the stock, and there was a small uptick on Friday, but volume, like I said, is very light. It was the largest volume day since the second trading day in August, so keep an eye on it. There were bullish crossovers on MACD on both time frames, so when that happens, that signals that possibly a new push higher. So that's what we're looking for CDNA next week, a possible move above that 160 resistance level. And then one OTC stock to take a look at in this video, PLSB. This stock had pulled back after a big run. You can see here it formed a giant bearish dark cloud cover reversal pattern. That's always a big red flag. Notice how it had a multi-day run, a 3-day run here, and then there was a gap up open. Well, the gap up open was followed by a big pullback. Okay, so this is the open on the candle on the 7th, and then it pulled back below the close on the previous day, and then it closed more than halfway into this candle, and so that created bearish dark cloud cover. And many times when that happens, that's a major red flag, especially since it closed below the 100-day simple moving average at 0.0034. That signaled downside risk. There was 5 red candles in a row, and then now it's hitting a major support level. It's hitting the middle Bollinger Band at 0.0021 and the 50-day simple moving average at 0.0022. If those levels hold next week, if you see 2-1 hold, then that should be the reload level. Down here, the lower wicks are hitting 2 and they're hitting 19. Basically, going forward, candles forming above this dotted purple line and green line signal upside potential. If there's a close below, that's going to signal downside risk. So this is set up for a technical bounce off of middle Bollinger Band and 50-day simple moving average support next week. If that happens, you want to see a close above EMA 8 here. That's the top moving average at 0.0025. If that happens, then you could see a run back up to the 100 at 0.0034. So keep an eye on PLSB. Okay, thank you very much for viewing this video. If you'd like to learn more about charts and technical analysis, check us out at mychartcoach.com and our YouTube channel at mychartcoach.com. Thank you.